Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY for June 17th, 2025. And with that said, let's go ahead and jump straight into the data. But I do want to preface this video. Uh, Obviously, you can hear that my microphone is not working. So I am in the process of ordering a new microphone, and it probably will be 1 or 2 days until I get it, so I have to use my built-in, uh, laptop microphone right now. It doesn't sound good at all, so the next couple videos are going to sound pretty bad. But if you can manage to listen to it, I I would appreciate it. Anyway, let's go over the data quickly. So today we saw the New York Empire State Manufacturing Index come in very, very, very cool. So it came in at -16. The forecast was expecting a negative 5.9, almost a -6, but it came in, a whole 11 points lower than that. So that's major. And we saw the 20-year bond auction respond to that. So we see, as you can see, the yields pulled down, 0.3% essentially. So that's pretty big when it comes to the 20-year because that's the long end of the curve. So that's a very major move in the treasury market. Now, going over the data tomorrow, we do have a pretty busy day. So this is going to be a lot of the retail data and the export and import data. So again, the export and import data will be able to tell funds kind of the GDP numbers. So they will use that data and seeing how the forecast is expecting, a double cool print right here. As you can see, a negative 0.01% and a negative 0.03%. So both of those are saying that we're receiving cooling right now. Now, they are expecting slightly hotter retail sales or core retail sales, but as you can see, the retail sales month over month for May, they're expecting a negative 0.6%. So overall, they're really expecting cooler data coming in tomorrow, which that should increase the rate cut percentage. Right now, it's pretty much at 99% for a rate pause for this Wednesday FOMC meeting, but very likely that's not going to change. I mean, obviously, 99%, it would take something pretty drastic to change that right now. But again, we have a ton of really important data at 8:30 in the morning, so that's during the pre-market. Whatever the market's going to decide from that data, we will, know by open. Now we also get industrial, like some of the beginning industrial data sets prior to open as well. Business inventories, we get that after open. That's not very important. Retail inventories, I really don't think that's going to be super important right now. There is the tips auction. That's not important. That's a way to basically hedge your bonds. So, again, that's really not a big deal. Now, there is the Atlanta Fed GDP tomorrow, and that is kind of a big deal. As I said in my video last night, there was a really large discrepancy in the data sets the last three prints. So, I believe it went from a 3.7 to a 4.6%, and then it went basically 4.6, 4.6, and then now it's coming back into, reality again. It's 3.8. So this is very important. If that was some sort of, bump in the data set, then, that's fine and dandy. But if that was something real, then potentially, we will see that within the Atlanta Fed GDP now. The Fed GDP now is essentially the most accurate GDP percentage the Fed releases, and that's based off of, again, the export price, import price, and just a lot of different data sets go into that. Let's see. So no earnings. Uh, All right, let's go ahead and talk about the technical analysis then.
Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks.
So getting into tonight's technical analysis, as always, let's go ahead and open the daily chart. Let's go ahead and turn on our moving averages and our Bollinger Bands. Now, the market closed at 602.68, which that was slightly above where the 5 mile is currently. So the 5 mile is at 601.57. So it's very, very likely we're going to see that very close to the 602 range, but that really does depend on, the opening value, because right now in the overnight we're getting some kind of decent selling. So we don't know if that's going to pick up or not. But if we do open lower tomorrow, then potentially we can see the 5 mile opening where we're at right now, or even lower. But assuming we open kind of around where the market closed at, then again the 5 mile will be around that 602. Um, what's important about that is the upper bounds of the 5 mile is going to be around the 604 range, and the lower bounds is going to be all the way to the 600, even potentially to the 599. So technically right now the market is in the lower bounds of the 5 mile, and we are starting to see the 10 mile pull up to the 600 range. It's currently at 599.18, but probably another 2 sessions, if we manage to stay above 600, then we will see the 10 mile pulling above that range. Now, the 20 mile, I thought it would be a lot closer to the 594 than what it is, but it's currently still at 593.78, so it's still probably another 2 sessions away from jumping up to that 594 range. And if we do have some major move upward, then the 20 mile would probably pull up a lot closer to the 595 range. Now, 200 mile doesn't really matter right now. 50 mile doesn't really matter right now. The upper Bollinger, as you can see, is slowly starting to open up a little bit, so it's at 607.81. Depending where we open tomorrow and depending on the price action tomorrow, it's very likely going to be around that 608 range, potentially even the 609 range if we start seeing like some major buying up to that 604, 605 range. So just be aware of that. Remember, I kind of consider Bollinger Bands sort of like the edges of the road. So when you go off the edge of the road, generally you don't stay off of it for too long. So if you do get to that range, it's kind of the current cycle's top, kind of, sort of. We'll go into that another time. I don't think we're going to be pushing that right this moment. And let's see, bottom Bollinger, it's still far away, but it is creeping up towards the 580 range. So it is slowly starting to pull up towards where that the 20 mile is, if we don't end up testing the 20 mile very soon here. Now, let me just eyeball this a moment. Okay, so let's talk about the bounds, because we talked about the bounds of the 5 mile. Now, the bounds of the 10 mile, since the 10 mile is basically going to be around the 599.50 range tomorrow, that puts the upper bounds at around 601.50 to 602. So basically, we're trading in the upper bounds of the 10 mile, while we're also starting to trade within the lower bounds of the 5 mile. So even though that seems a little complicated, that is a form of consolidation. And if we continue selling downward, then we will slowly pull out of the bottom bounds of the 5 mile. We will slowly move away from the upper bounds of the 10 mile. We will pull to the lower bounds of the 10 mile and start pulling towards the upper bounds of the 20 mile. And, the whole process continues. But when you have the moving averages so close together, it creates this kind of elevator, and whether they take it quickly or they take it over, a whole week and a half, that's to be determined. But it is setting it up to where each session is actually testing these moving averages pretty deeply. Now, let's go over structure for a moment. And talking about moving averages, one moment. I'm actually still very, very much so in the camp that I do believe we are going to head down and retest this 20 mo. But because we technically did go through it the other day when we had that really, really deep candle in the pre-market, that day we jumped to the 591, 82. Technically, we touched the top of the 20 mo. So, is the market going to use that as the liquidity to push us up towards the upper Bollinger? Potentially. We're seeing the 5 mo being tested, and so far it looks like we're going to test the lower bounds of the 5 mo very likely tomorrow. So from that range, it can kind of either bounce upward towards the upper Bollinger and really take, another upper Bollinger move and complete this cup, basically finishing out that 611 39 range before the SPY dividend hits, and finishing out that cup. And that allows, they'd have to time that really close. They'd basically have to push it tomorrow to secure the upper Bollinger within this week. Now, we do have a lot of data this week. Again, we have FOMC on Wednesday, so potentially we could get a major data set that could push us upward. But we haven't seen a full 20 mo test in over a month now. A month and a half. It's actually nearing 2 months at this point. So I would like to see a 20 mo test during the intraday where we actually go through that level during the trading session. It's been quite a while, and knowing how the 20 mo trades, this is very, very, very overextended in terms of not testing the range. It's very, very likely we will get a deep 20 mo test very soon just because of that timer. It is the 20 mo average, 20-day average. That's how it works. You generally test it every 20 trading sessions. So, yeah, I am leaning towards that. We have the SPY X dividend on Friday, which means that the very minimum we're going to see knocked off the top of SPY is basically $1.70. I'm leaning more towards that $1.80 range, give or take. But at the very least, we're going to see the $1.70 range taken. So overall right now, I am pretty bearish for the 20 mo, but that doesn't mean I'm bearish overall. I think there is a lot of room upward, and once we do actually test that 20 mo range, there's going to be, an absurd amount of room upward. I've been saying we're going back to all-time highs for a while now, and this is kind of the movement we need to see to do so. Again, we're very close to hitting that cup top. Potentially this could be a cup right there, and I'm going to go over this on the 4-hour chart, but I suggest following on the hourly. It just is a lot easier for me to see on the 4-hour chart. But we have a couple different structures right here that I want to highlight. Ignore these lines on the screen right now. Hold on. Ignore those lines on the screen right now. I just want you to focus on this. So right here, I am actually expecting this to be an inverse cup rather than being a bullish cup. And the reason why is because we actually haven't hit the top of that cup. So far, this is looking more like some form of head and shoulders. And I know it doesn't exactly look like it yet, but if we have another session where we pull down, pull up, then we can finish out this inverse cup, and that looks something like this. It will allow me. Okay. It won't. Hold on. Okay, so it essentially looked like that. And from there, we have some pretty major liquidity levels to go through. So we essentially have this entire range right in there. And I'm sorry, I'm just kind of drawing. So that goes all the way down to the 573. I don't really expect that right now, but then again, um, if we get some major selling, that's really not that far away. Technically, that'd be a lower Bollinger move, and that absolutely could happen. We have been pushed up very high, but I'm not expecting that. What I would expect more is closer towards like this 583 range, and even then, that's still pretty drastic for what I'm expecting right here. There is this 589.03 gap, and that seems pretty reasonable. That would fully test the 5 mile or the 20 mile range and be able to give us enough liquidity to move from there. But the thing is that this is a very large cup, so if we do start heading upward and we do secure that level, we're going to need to build a very large handle off of this, very likely to continue upward. So eventually we will have to start taking some of these gaps down. Eventually, probably in the next video or two, I'll actually start marking these with some horizontal rays, but for now, we just need to be aware that potentially this could be trying to form a cup upward. And if we do see that, then it will close that 606.30 range, and from there we will look for a bearish structure. And let me go ahead and just draw that out really quick. It would look something like this. It would go upward in that range, and then from there we would look for the bearish structure to form a handle downward, and from that handle you would look for a bullish structure to give us a breakout. And that's kind of for the the bullish thesis right there. Sorry, my daughter's not having a good time right now. Overall, again, I am bearish right now. I do think that we will see selling to that 20 mile range, but so far, when we're considering the 5 mile, whether it's acting like a magnet or a force that's kind of repelling us away, we need to look at that. And so far, it's not really being a force repelling us away. It is acting like a magnet. So today it pulled us basically right into it the entire day. We actually didn't trade above the upper bounds of the 5 mile range for very long at all. Just going over the actual daily chart, or the actual 5-minute chart. We were only above the upper Bollinger for, let's see, probably about an hour and a half. And then after that, we just sat in that level, and from the entire time, it was just pulling down, little boost up, pulling down, little boost up, pulling down. So this does look very bearish. I'm sorry, my daughter's screaming right now. Yeah, probably going to end the video here. Yeah, I am bearish. I am expecting the 20 mall. You should be set up for either the 20 mall test or the upper Bollinger from here. Because we are starting to test at 5 mall, that means it does unlock the 20 mall or the upper Bollinger. So just set up contracts. If you're setting up contracts, make sure they're about 2 weeks out to catch the move. Okay, other than that, I hope everyone has a great night, have a great day, have a great and safe trading day tomorrow, and I will talk to you in the next video. Have a good one.